Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we are going to be jumping down into the world of Bitcoin and Ethereum. I'm going to be giving you a brief update on what's been going on in the last 24 hours and what I would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Now, if you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out. You'll also find links to the new community-led Cheeky podcast, a fantastic way of staying up to date with the ins and the outs of crypto whilst on your daily commute into the office, our Patreon service, and a whole host of additional, kind of offers and promotions and things like that that are going on in the space. So why not check out all those links in the description down below. Okay, guys, we're going to keep this nice and brief. There isn't too much to report over the last kind of 24 hours. So we'll just jump straight down into, I think we'll start things off with some Glassnode data, take a look at what's going on there. And then what we'll do is we'll just jump straight down into the charts and take a look at what price action of both Bitcoin and Ethereum. So let's start things off with the old Glassnode data. Now, for anyone new who may not have seen this before, basically what I'm doing is I'm taking the API data from Glassnode Studio, throwing it into Power BI so that I can actually kind of create my own reports with the data and see more information all in one screen rather than having to flick around a lot. So on this particular dashboard, what we've got is basically all the inflows and the outflows for 2022. This is from January the 1st. So we have 7.27 million Bitcoin going onto exchanges with 7.55 million coming off of the exchanges. Over on the left hand side here we have Bitcoin's balance on exchanges. This is a 365-day rolling chart, basically just showing that we have basically Bitcoin going down over time. So basically exchanges are losing Bitcoin. Okay, so a steady level of accumulation with Bitcoin leaving the exchanges. Okay, we can see the volatile movements pretty much from March, where a lot of the Bitcoin was coming off of the exchanges. Now over this side we have the net difference between your inflows and your outflows. Each bar is a 30-day average. Okay, so the reason for this one is to basically just graphically see whether or not we have large chunks of accumulation happening over a large period of time, or large amounts of Bitcoin going onto exchanges over a period of time. And when we have flat moments like this here, this is basically saying that there's not much difference between your inflows and your outflows. Okay, and we're going to talk about that in a little bit more detail soon. Okay, so down at the bottom here we have the Huddle Waves. The Huddle Waves basically are showing how long Bitcoin has been static in a wallet. So basically you've got 10 years or more, 7 to 10 years, 5 to 7 years, 3 to 5 years, 2 to 1 year, 2 to 3 years, and 1 to 2 years. Okay, and then of course you've got all the smaller time frames on the left hand side. Now what we're doing here is basically just saying or looking at the day-on-day differences. Okay, so 13.04% at 10 years or more. We can argue that's lost Bitcoin. When it gets to this bracket, you can argue that maybe the keys are lost and people don't have access to the Bitcoin anymore. Then we come down to the 7 to 10 years. There's no change between those 2 days. And there's a slight increase here in the 5 to 7. We go from 4.64 to 4.66, which means we have a slight decrease with the 3 to 5s as they move up the bracket. We go from 14.28 to 14.26. We come over this side, we can see that there's a slight increase as well with the 2 to 3 years, and going from 6.33 to 6.36%, meaning that there's a slight decrease with the 1 to 2 years, moving from 20.86 to 20.82. So basically Bitcoin is aging. So if you've been holding for more than 1 year, it doesn't look like you're actively selling or getting shaken out of the space. You're still hodling. Now over here on the left hand side, the last 24 hours we see a slight decrease. We see a decrease of activity and going from 1.12% down to 0.84%. So we know that basically diamond hands remain diamond hands and Bitcoin's aging well with low activity in the last 24 hours. Okay, so pretty standard stuff that helps us understand a little bit of what's going on a slight macro level there. So the next thing we're going to do is we're going to jump on over into the inflows and the outflows. So this is probably one of the most powerful reports, even though it looks quite boring. If we come into our Glassnode Studio here and we go over to the exchanges, we come down into the inflow data, and you have one chart here for inflows. I'd have to log in. One chart for the inflows, and you'd have one chart for your outflows, right? Whereas what I've done here is basically take the API data and overlay the two things, so we can see both the inflows and the outflows together. Now, this is one of the things that really bugs me most when I start seeing other kind of, I guess, influencers, if we want to call ourselves that, I don't know. But when we see other people in the space, just focusing in on like inflows, for example, and they say, oh, we've got like 50,000 Bitcoin inflows, you know, really bearish kind of talk. You can't just take inflows in isolation. You absolutely categorically have to take into consideration the outflows, so that you can actually have a good understanding as to whether or not the inflows are being matched by the outflows, or whether or not we are seeing more outflows than inflows, right? Just focusing on one of those metrics isn't exactly good analysis, in my opinion. So when we throw this up here, we can see that we had yesterday, I think it was 47,800 Bitcoin going out of exchanges, with only 31,000 going into exchanges. Basically, accumulation was going on. Now, if we shoot back, so that was 2 days ago, so that was the 5th. Now, if we shoot to yesterday, we can see that we had 11,000 going in and 11,000 coming out. It was static, which means basically a transfer was going on. Okay, and that's important, and we're going to talk about transfers in a second. So basically, we see that the inflows were matched perfectly with the outflows, and actually there's no net difference on the exchange. So take all of the inflows, take all of the outflows, and there isn't actually anything worth noting, which then takes us on to the next chart. Okay, the next chart here shows us a 90-day movement from the wallets that have 1,000 BTC, 100 BTC, 1 BTC, or 10 BTC. Okay, so there's 4 brackets, right? We've got these 3 here, 1,000, 100, or 10. And then on this side, we've got the 1 Bitcoin or more, okay? So these graphs, they are showing us some very important information. Okay, so over here on the left-hand side, these are basically big whales in the space with over 1,000 Bitcoin in their wallet. Okay, and these guys have been aggressively coming out of Bitcoin. Okay, there's a slight uptick at the bottom here, and like there was a slight uptick over here, or even over here. But essentially, this isn't much to really be noting. Instead, you'll take a look at this macro picture, and we're seeing a pretty interesting kind of move to the downside, as in these guys are aggressively de-risking and basically positioning themselves out of Bitcoin. The sharks were following suit, but they did actually have an uptick here, probably just following the trends of the market a little bit better than maybe the whales. So as the price started to push up, they started to accumulate, but I don't think this is going to be long-lived, and I do expect this to pull back down a bit. Now, over this side, we have the 10 Bitcoin or more. Now, this is obviously going up in the space, and it has started to plateau quite a bit up here. As you can see, not many people now are accumulating, and maybe they're starting to really reconsider their positions. But basically, what we've got here is smart retail money. I say smart retail money, but retail money from high net worth individuals, probably 10 Bitcoin or more. They've kind of got decent sized wallets for Bitcoin, okay? Then, of course, we come over to these guys, which is basically just 1 Bitcoin or more. And there was a recent article where they're saying that there's a huge number now of 1 Bitcoiners. And it was kind of being read as if it was a positive thing. I think it's positive to have kind of 1 Bitcoin, at least in your kind of portfolio if you can. But essentially now might not be the best time to do it, right? And so what we're really witnessing with all of this information, before just rambling, is that the whales had to come out of their position because they don't want that much exposure to Bitcoin. They think it's high risk at the moment, blah, 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 whatever the reasoning is. Essentially, they're de-risking, they're coming out of Bitcoin. Okay, in order for these guys to come out of Bitcoin, they need some money to do it. They can't just do a market order and drop 1,000 Bitcoin on the market, because the price would tank very, very quickly, right? So what they have to do is they have to find some buyers, right? And buyers are usually found in pockets of liquidity, usually through things like liquidation events, stop losses, things like that. Or, maybe there's a bit of a pump to the upside and retail starts FOMOing in. And as a result of that FOMO, these guys are able to basically sell their Bitcoin directly to them. And that's kind of exactly what you're witnessing here, right? The sharks kind of followed a little bit of what the whales are doing, started to have a little bit of an uptick at the bottom here, but the dolphins definitely provided some exit liquidity for the whales, and obviously our shrimps here, the 1 Bitcoin or more, provided a lot of liquidity for the whales to come out of the space. So the question that we have to ask ourselves is, and it's a simple one really, is do we think the bottom is in? Okay, and if it is the bottom and the bottom is already in, then are the whales selling the bottom? And we also have to bear in mind that the whales are whales for a reason, and normally they don't come out of these things on the losing side. So if the bottom is in, the whales have sold the bottom, and they were buying at $32,000. Okay, so they're at a loss. So it'd be an interesting kind of thing. Do we think the whales are selling at the bottom? Question. Answer it in the comments down below. It'd be interesting to know what your thoughts are. And obviously we have the retailers who are providing that liquidity, and they obviously think the bottom is in, right? So retail money thinks the bottom is in, whereas the whales potentially probably don't think the bottom is in, and they're coming out and they're de-risking. So it's an interesting kind of thing to take a look at. It continues to be an argument whether the bottom is in or not. I think many people are starting to come around to the fact that it probably isn't. You know, from an Elliott wave theory point of view, we can't say for sure that the bottom is or is not in. There is no structure there, and we're going to talk about that in a second. But this is interesting data that's basically indicating to us that, you know, maybe these guys know something that we don't. Okay. So on that note, let's go down into the charts for Bitcoin. Okay. So here we have BTC paired up with USD on the hourly chart. Binance is the data source, okay, USDT, sorry, I should have said Tether. So basically, as we were talking about yesterday, which is why this is a video and not a stream, there isn't too much more to talk about here. But basically what we've kind of got is this, I guess, bull flag. I want to call it a bull flag. Basically, this parallel channel just kind of moving us down here a little bit. Now, the interesting thing with this is obviously the direction of the move. Okay, it seems like it's going down, and everyone's starting to probably feel a little bit too bearish about it. But essentially, what we've actually got here is this move coming up. Okay, this move coming down here on this kind of parallel channel, really testing this area here. Now, what you notice is that this upper area, the sellers are gaining momentum, okay? And you can see here that the buyers are losing momentum, okay? But this, however, is called a continuation pattern. You can call it a bull flag if you want as well. Here's your pole, here's your flag, etc. But we can just think of this as a continuation pattern, right? We had an upward directional move, then we started to see this pattern. We'll probably exit out, moving on to the upside, okay? Now, I still think we have to go down, okay? I'm not saying that this is anything more than what you see right here, a short-term move towards maybe this $26,500, which is, of course, a three-wave structure within my Y-wave move, which takes us from the 17,622 to 26,500, and basically would complete that structure. Once up there, we can move on down. Now, I have no structured moves to predict us going down lower than 17,622, but down we should go from this high point. It's possible that it does start earlier and it starts up here. I'm just not really expecting that. I think that this is a pretty clear pattern that we are going to move back up towards this range. And then once we're up here, we'll probably move on down afterwards, okay? So I think we've got some choppy kind of volatile movements over the month of August. 26,500 is the upper area. I can't really see us moving much higher than that. And, you know, for now, this is also, technically speaking, this could be the top of our Y waves. That's possible, but I don't think we're quite there yet. I think we've still got to go up. Might not reach the full 26.5, but upwards I do think we are going to end up going. Not only do we have the continuation pattern here within this range, but, you know, we do have, you know, many others. Now, one of the things I do want to talk about is how we are setting these lower highs and we're setting these lower lows, right? One of the things that I guess gets overlooked in this space is that seems rather negative, right, when you see those things, but actually that's positive. So let me see if I can shoot on up into a 4-hour chart. Just bring this down here a second. So let me see if I can find one. Let me find it. Where are we? Let's see what I can do. There must be one in this data somewhere. It's probably over this side. Okay, let me find it. Okay, so there's one right in here. It's a pretty bad example, but there's one right here. So we'll take this area, okay? So basically we have this movement, lower highs and lower lows, yet still we broke to the upside, okay? So we have that one there. We probably have one over here. We can see it right in here and right in here. Okay, it's more of a triangle, but you kind of get the idea. Lower lows, lower highs, break to the upside. Let's see what else. Where else have we got them? So that's the wave. So there's going to be clearly going to be some over here as well. So here's another one, right? On a slightly larger scale, but here you can kind of see that we have this move right in here and this one right in here. Okay, so basically lower highs and lower lows, you break to the upside. Okay, lower lows, lower highs, break to the upside. Lower lows, lower highs, break to the upside. Okay, here we are, lower lows, lower highs, break to the upside. Now, the reason that I mention this is because when it runs the other way, okay, where we are setting higher highs and higher lows, okay, we break to the downside. It's almost counterintuitive, okay? If we think about it, you know, it looks like, oh, we're moving up, we're setting the higher highs and we're setting the higher lows, and then bam, the rug gets pulled and you're dropping on down, okay? So think of it the opposite way around. So when we start seeing these ones where we see those flags in the opposite direction, this would be a bear flag, where basically you pull down with the volume into the pole, you lose the volume on the way up, and then you drop to the downside. Now, those are also very good, clear indications of what is going to happen next. Okay, so just outside of Elliott wave theory, just following some principles on you know, what you tend to find in this space multiple times over from many different kind of angles. I'm just going to tidy this up a little bit. Let's get rid of some of these. You know, it's important that we reflect that, you know, right now, what's going on with this low volume move is basically telling us that we are likely to see this small push upwards rather than pushing downwards, at least on the smaller time frame. Okay, so I want to make sure that I'm crystal clear here as well with my thoughts and my opinions on what is going on with Bitcoin, because I do see some comments and I clearly confuse people. And I don't want it to seem that I am chopping and changing between the directions that I'm going on. When I'm reading this data, I'm telling you what's going to be happening on a short time frame, what's going to be going on a medium time frame, and what might be going on a slightly longer time frame, right? Now, that might seem really confusing when 1 second I'm saying that we're likely to go on down, and then the next moment I'm saying we're going up, etc. Right? I'm trying to give you an idea as to what I think is going to happen in the order that I think it's going to happen in. So when I bring this back up again, my expectations here are that over the weekend, we're going to remain in this choppy kind of channel. At some point, we're going to break up, probably next week. And then once that is done towards the end of the month, I'm expecting some kind of move down, where I wouldn't be surprised if we do go down into lower lows, but I have no data to suggest it just yet, okay? So there's many different ways you could take a look at it, but from an Elliott wave theory point of view and the way that I've counted all of this, I do know that there's going to be a correction down. The only thing I don't know is whether or not it's going to go down into lower lows, because I can't measure that. Now, of course, you know, there are the areas of concern. I think, you know, this would be a nice area of about 16K. But if we drop down lower than 14,600, then we do have a macro structure on the weekly chart indicating less than 10K. Okay, so there are targets that we have in our heads, targets that we are kind of, you know, wanting to either A, avoid, or B, bring in, and all of that kind of good stuff. But for Bitcoin here right now, the way that it looks, probably choppy weekend. We take a look at the stochastic. We've got a little bit of movements there on the 4 hour, the hour. They're not really giving us too much indication. The 8 hours not giving us much indication. The daily is probably going to move up, so that looks like next week's looking pretty good. And we're going to take that weekly chart up into the overbought area. So for the most part, my expectations are that Bitcoin moves up a tad. Okay, you know, it might not go all the way to the full $26,500 target there, but you know, at some point, yeah, we'll finish this channel and then we'll move up. And once we finish that and completed the move upwards, down we're going to go. And until that starts, I don't know how low that's likely to go. Essentially there. So personally, I think it probably will go down lower than 17,622, but that's just my personal thoughts, and I don't actually have any data to back that up. So, you know, take that as a pinch of salt. That's just where I think, taking a look at the broader kind of market of things, how I feel that this market is going to go. But obviously, without the data to kind of confirm or deny that, you know, it's just speculation at the moment. Okay, there's many different ways we could take a look at it from the history of all of the kind of things that are going on in the space. But from an Elliott wave theory point of view, the kind of theory that I like to apply to the charts, I cannot predict that out just yet. Okay, so we'll see what happens after we kind of hit these high points, but down is my expectation. So let's go ahead and jump over into Ethereum and keep this rolling. Okay, so Ethereum kind of did exactly what I thought it was going to do yesterday. We did see some fantastic runs. I'm going to just clear out some of this because Yeah, we don't need this one. So let me just get rid of that for a sec. There we go. So yesterday what we were talking about with Ethereum here was this triangular shaped pattern here. Now it's possible that this breaks to the upside, but I'm not expecting that. We could think of this maybe as a fourth wave move, but I'm again not really thinking that's likely. I think that this here is our little fourth wave within our fifth wave, and all of those kind of really good things. So yeah, so I'm thinking this is now a choppy corrective move coming on down, and we're kind of fighting against the obvious, which is a breakdown. Of course, you know, until proven otherwise, that's going to be our go-to. $2,159, this one up here. So this is essentially our kind of target. If we can hit this 2,159 or greater, it basically means that we don't have to drop down into the lows of $500 to $700. But failing to do that means you have to move down there. Okay, Elliott Wave theory tells us that that's going to happen. So with that, you know, we want to be kind of reviewing what's going on. Now, this is an incredibly choppy kind of corrective structure. People might want to also take a look at this and think it might be more of a kind of bull flag or anything like that. I don't think that's the case at all. We're in more triangular shaped wedge patterns. And again, you know, what's going into this is quite an interesting one. So we could look at it maybe as an Elliott wave triangle, but that would put it in a really odd position. So we wouldn't really expect that. And so, yeah, so for me, that would be a very strange thing to kind of see there. So I think essentially all we're really doing is actually starting to form out the structured move for a drop to the downside, but we're just a bit too early to see it. In terms of what I was talking about yesterday and the day before, we're looking at the resistance and we're looking at the momentum behind the price movements. If we bring this up here, you can kind of see that we were talking about, grab hold of this, right? We're in the oversold area down here. So a move upwards was likely to take us up towards 1,740 to 1,760. We can see that we kind of entered into that yellow box, of which we were in the overbought area, then coming back down. We were looking at coming into this area here yesterday, and I was saying we're probably going to revisit this area of resistance down here, which was coming in between 1,640 to 1,670, and we're turning that into a bit of support as we are right down here. So knowing that we've got the weekend, we've still got another volatile day with volumes being incredibly low, my expectations are that we might revisit this little box at the top here, get rejected from here, then fall back down into this yellow box again, and maybe even test this lower trend line as we tested here and here. Not that I like trend lines at all, but you know, we'll see if we can, you know, see if we can just test that line again. But essentially, yeah, so for me, that's kind of what I'm expecting here. I'm not expecting much to happen today, but you know, when we start reflecting on all of this structure here, we've got some interesting kind of moves. This looks like a 335. This looks like corrective move coming up. So there isn't too much coming on into this. So this could be a start of a really kind of rather complicated, maybe leading diagonal move. But again, we haven't really got any kind of good structures at the moment to kind of show us where that might go. But when we start going through these higher time frames, you can see the 4 hours correcting down quite nicely, and so there could be some volatile movements to the upside soon, probably aligned with Bitcoin moving up to 26.5. On the 8 hour though, does need to come down. On the daily, it's actually moved up a bit, so we'll watch that one. And on the weekly, we're almost in a completely overbought area. So Ethereum here is definitely looking like it's going to be moving down on a longer time frame, but I'm expecting some more volatile movements within this range over the next few days. So basically, I would expect us maybe to retest this lower range today, and then kind of move on up, maybe as Bitcoin moves up a bit to test the top range here. One of the things that we're looking for, though, is not to cross the 1,784 line. We want to stay below that, and then see a breakdown at some point towards the end of the month, beginning of September. That would be my expectations. Now, in terms of how low this thing's going to go and how fast it's going to go, I do not know how fast it's going to be, but our targets are 570 to 746, which seems absolutely insane, but I have a bit of a reputation for that now, I guess. You're talking 55, maybe even 65% to the downside for Ethereum. Now, completing this fifth wave, as I said yesterday, if I bring this up into a daily chart, would be, actually bring it up into a weekly, this would be bad because it would mean that we could potentially be looking at a zigzag pattern corrective structure, taking us down significantly lower. So 1, 2, 3, 4, 5, like so. 3-wave bounce into the bull run, okay, not going up into new all-time highs. Controversial, I know. And then, of course, you know, moving on down into a final 5 waves in the next bear market, creating a 3-wave corrective structure, A, B, and C, before we can even see maybe another 5-wave move going on up on a much larger scale at a later date. Okay, and basically that would then allow us to marry all of this up as a big A, B, C structure in the future. Okay, so when it comes to understanding what these patterns mean in terms of the waves, okay, we cannot have, at least as per the books and the literature on Elliott wave theory, we would not expect to have 5 waves go up here and then have 5 waves come down here. Okay, these things are normally nested inside things, and a 5-wave move is only really ever going to be a 5, 3, 5 structure. So an A, B, C, or it would be a 5, 3, 5, 3, 5 impulsive structure. Okay, and again, each of those would be 5 waves, etc., etc., etc. So knowing that we have this kind of reasonably short 5-wave move kind of makes it feel more like this on a slightly larger time scale. So this would basically be hard for many, I guess, Ethereum maximalists to hear, and probably be called all sorts of different names under the sun. But basically, in a nutshell, you don't go up into new all-time highs in the next bull run. You probably maybe only move to about $3,000, and then you move on down from there, into the next kind of bear market. And it wouldn't be the first time we've seen such a structure. I mean, we just have to look at a few other altcoins that just haven't really hit their previous all-time highs, and all that kind of stuff. There's data that you need to acknowledge. There's a rhythm and a rhyme to how these markets move. So yeah, it is what it is, and it'll be interesting to kind of see how it plays out. Of course, moving up higher than $2,159 prevents all of that. And that's the key. Okay, so keeping a close eye on how all of this kind of stuff unfolds, but how Ethereum for me has got some rocky roads ahead, specifically with everything that they're trying to get done, and the migration of miners maybe leaving Ethereum over to things like Ethereum Classic, etc. Maybe there'll be a maintained Ethereum as we know it today, and then a proof of stake version also kind of being hard forked off and doing its own thing as well. So who knows how it's all going to play out, but yeah, the future here, according to Elliott wave theory, could be a rocky one for Ethereum. So guys, I'm going to leave this video right there. If you found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.